Welcome, everyone. Thank you for joining us for today's live webcast, Managing Third Parties for Information Security Risk. But before we dive into today's topic, I want to just take a minute to introduce you to today's speakers. And we're going to start from the right on this slide. Mark DeLuca, Senior Vice President of Global Sales. Mark has spent over 2 decades in the enterprise software market. At Opus, Mark is responsible for driving revenue growth and building a world-class sales organization. Mark was Senior Vice President of Sales at Hyperos prior to the company's Opus acquisition. Our next speaker we will have is Sandeep Biday. He's the Vice President of Third-Party Management Product Strategy. Sandeep is the Vice President of Third-Party Management Product Strategy, and he has spent more than 2 decades in the software industry, building traditional and cloud-based enterprise software solutions, bringing them to market, and supporting them over multiple release cycles. And we have Doug Goldman, VP of Innovation and Alliances for Opus. Doug is an expert in regulatory compliance and information security, and is responsible for the Opus third-party management information security strategy here at Opus. And Doug, with that, I'd like to turn the presentation over to you.
Thank you, Sharon, and I want to say good afternoon to everybody. Good morning if you're on the West Coast. So we have a few things we want to cover today. We're going to give a little bit of background. Why is information security such a hot topic for virtually everybody we talk to? And we're going to then walk you through some of the steps that we've learned are best practices for managing third-party InfoSec risk, which is different than managing other types of risk, and it's different than managing InfoSec risk internally. We're going to give you a playbook. Actually, we're giving out a document that goes with this webinar here. It's a playbook that covers all the same information here. It's going to have a series of tools that we're going to help you understand how to use these tools to assess and manage InfoSec risk, and then how to report the results.
Okay, so who is Opus? There's a simple premise behind Opus that businesses need faster, better decisions in third-party compliance and risk to give them an advantage in the marketplace. Those third parties generally fall into one of 2 buckets, customers or revenue relationships, and then vendors or expense relationships. But be they revenue or expense relationships, many of the world's largest companies use our best-of-breed SaaS applications to identify and mitigate risks and to automate the whole business process of third-party risk management to make it happen quickly and efficiently. And when you do that quick and efficient thing, we reduce the time and work effort, and that enables faster and more confident decisions so that your business can thrive. So when we're talking about risks, a huge burning issue, and the one we're here to talk about today is third-party information security risk. So I'll pass back to Doug to talk a little bit about the playbook that each of you will get sent to you after today's webcast, and then we'll begin the discussion.
Thanks, Mark. So we've spent some time working together with the OSEG people, leader in that space, to develop, again, as I said earlier, a set of tools that you could use pretty much as is, or you can integrate into some kind of an automation solution, kind of like what we deliver at Hyperos, for managing third-party InfoSec risk. It's all about how you're going to use controls as a lens for assessing and managing that risk. So we're going to encourage you to download this playbook. We're going to be referring to it throughout the conversation today, and I think you'll find it very, very valuable.
So why is this important? Let me just give a little bit of context before we jump into the framework and how it's done. We're in a place in time where companies have been outsourcing more and more over time, and not just outsourcing extraneous functions, but core business functions. And in doing so, they're taking on more and more third-party risk exposure. At the same time, there tends to be more and more of an IT element to all the things that we buy from providers outside of the firm, which greatly increases the risk. So we're in a place where outsourcing is growing dramatically. Therefore, InfoSec risks are growing dramatically. And companies have traditionally been in a place where they naturally tend to manage those large, high-value, complex relationships and not always pay as much attention as they should to the ones that do pose risk but are maybe not so large in size and pervasive across their business. And that brings us to this topic of InfoSec risk, because what we're seeing happening in the marketplace over the last 2 to 3 years is a lot of risks being created by relatively small, seemingly innocuous third parties that fly below radar, are not tightly managed by the companies because of their size or the scope of what they do, and it results in a bad outcome. And so with that introduction, we'll pass back to Dov to take us through a little bit about how companies are getting their arms around this particular risk, InfoSec.
So most people who are involved in vendor management or third-party management will look at the process of IT risk management in the third-party space as a black box. The people who do it seem to be performing some form of voodoo. It's just not understood how they go about it. And the secret is that everybody who we've talked to who is actually doing an effective job of assessing and managing third-party InfoSec risk, they're throwing spreadsheets and a lot of very smart and expensive and scarce people at it. So you've got teams of IT risk assessors or auditors, depending on the organization, the terminology might be different. A loaded cost for a typical experienced SME in this space is about $200,000 a year. They are hard to find. A lot of companies are hiring people right out of school, trained but not really having any real-world experience. After a couple of months working for a company doing this, job openings open up for them all over the place. They're getting hired away for $10,000 or $15,000 more, and boom, you've lost an important resource that you've trained already. What we've seen in the market is that in a year, a typical SME, an experienced SME that is, can perform somewhere in the range of 20 to 25 on-site assessments or about 75 remote or virtual assessments. An on-site assessment for a lot of the companies we do business with, they're somewhere between 2 and 5 days on site, but on the outside they can last as long as 2 weeks. A remote or virtual assessment of InfoSec risk will usually be something less than a day. And so these are long, complex projects in their own right. And everybody who we're talking to is under pressure. You've got to set a hard and fast limits as to how many assessments a given subject matter expert can perform. You don't have a lot of them available, and yet everybody's under pressure to do more of them. Going back to something Mark said a few moments ago, it's very typical that a large organization, let's say in the fin services space, is going to be good at assessing their critical vendors, the top 1 to 400 technology service providers that help them run their business. But that's not really where you're going to see the big risks. The scary stuff often comes from outside of those very well buttoned up organizations. It comes from the smaller organizations like the HVAC provider that provided that vector into Target. And so you've got to do more of these assessments. If you can't hire more people because you can't find them or you don't have budget, how do you do more? You need some kind of force multiplier. So we're going to talk to you today about the way to do this, the best practice, the most efficient way we've seen to do this. So what's different about InfoSec assessment from other risk domains? If you're used to being a vendor manager or you've been managing third parties for a while, you know what you do. You have questionnaires, you have attestations, you have scoring, you have some kind of an approval hierarchy, and you essentially, that's how you're managing risk for a third party in a bunch of risk domains like ABAC or financial viability, diversity, anything like that, insurance compliance. But in the InfoSec space, that voodoo or that black box, well, the main tool for those IT risk people is something called a control. What's a control? It's a set of countermeasures or safeguards that are designed to prevent certain security risks, which are vulnerabilities, from becoming threats And when they're exploited, they become actual business risks to an organization. And so controls are very, very important because InfoSec is complicated. Cyber threats are many, and they're multiplying. So a control framework, that's a list of controls, provides essentially a to-do list. You have to think about all of these things, a list of 100 things, 50 things, 200 things. That's your control framework if you want to protect your organization from cyber risk.
Can you give an example of what a control might be?
Well, a really good and very simple example, Mark, would be a control to make sure that you have good password management policies and procedures. You want to make sure that your people are forced to change their passwords every N days, let's say every 3 months or 75 days. You want to make sure that they're going to be required to enter a password when that change is forced that has what's called password complexity, and then you want to mandate a certain minimum amount of character to password complexity. So it's a simple example of a control, but one that has far-reaching ramifications because it protects your data.
Thank you.
So I want to add one point, actually, before we go on to the process. Control frameworks are out there as good standards that have been defined by very, very smart people, like the International Standards Organization, their ISO 27001, 27002. That's the kind of mama of all control frameworks. That's the most accepted information security control framework in the world. There are others that have been based on ISO, like NIST. That's a U.S. government standard that is being more and more adopted in the United States within the FinServ community, certainly within the organizations that serve as government contractors. But it's an excellent standard that is really being accepted in a lot of places within the U.S. There are many other standard frameworks that deal with more specific sets of risk, like PCI for credit card risk, HIPAA for information related to health issues. It's a different category of risk. And then there are some specialized, still InfoSec-oriented frameworks from organizations that have been focusing on this for years within the United States and internationally, COSO and COBIT and others. And so there are a series of good standards, and again, what they are essentially is a to-do list. If you want to protect your organization, follow this to-do list. You've got the recipe, good best practice.
How many controls are there in one of these frameworks? Is it like a couple of dozen, a few hundred? How big are they?
So they range in size from in the low hundreds for the ISO framework and another framework called AUP from Shared Assessments, up to as many as 900 for one of the bigger implementations of NIST SP 853 Rev 4. And so there's a very broad range, but some are between 100 and 1,000 controls. So It's a big area. Yeah, there's a lot of to-dos in that list of things that you use to protect your organization. So how do you go about this process? Well, this seems to be the best practice that we found out in many conversations with people in lots of industries in the U.S. and internationally. The first step is to segment your supplier population, just like you would with any other risk domain. You're not going to subject every one of your third parties to the same standard of care. You're going to segment them according to their criticality to your business. So the organization that cuts the grass at your headquarters is not going to get the same level of focus as the people who are your co-location partner. They're actually hosting your client data in all of your major systems, but they could be still, those people who cut the grass could be an InfoSec risk for you because maybe they submit invoices into your accounts payable system, they access your network. And so you've got to have a spectrum. You've got to tier your third parties according to what they do for you and how much they expose you to. And that's going to then tell you how to triage them for the standard of care.
And I'll just jump in here for a minute, Dov, and say that this segmentation piece is done across the organization. It's not in particular a InfoSec domain thing. It's done across the board. And the InfoSec person generally picks up the assessor, will pick up at the scoping phase, which is the next one. But if this first one, segmentation, isn't done right, then third parties that should go through this fairly diligent InfoSec process will be missed. So a lot of large companies go through this process where all third parties go into a machine, and we provide such a machine, so it's worth mentioning, to figure out who they are, uniquely identify them, and then to assess the nature of the relationship so that those with InfoSec risk can be automatically funneled down the right path. And in doing that, you sort of get a closed loop system in place where somebody that poses InfoSec risk to the firm, it's very difficult for them to sort of evade detection or fly below radar.
That's right, Mark. And just to give a big, ugly example of where that may not have been done right, go back to Target, where chances are that HVAC vendor was not considered an InfoSec risk. Didn't have a closed loop, including everybody. You've got to include every single third party. You got to make sure you have a very systematic approach to this. So the next step that is, unlike the segmentation, which as Mark said is kind of general, scoping is much more technical. What do you have to do to focus on a specific relationship's InfoSec risk? So you've got your list of controls. Let's say it's your ISO framework or your AUP framework, 100 and something. Not every one of those controls applies to every relationship. And if you applied every single control to every relationship, the burden would be so great you couldn't complete the job. And so understand what the vendor is doing for you, what types of data they touch, do they talk to your customers, and how they access your network. And that's going to tell you which controls should be included in your assessment. And that's also going to tell you which due diligence evidence you're going to need to collect. The controls are going to give you the different areas you're going to have to protect in, where the threats are because the vulnerabilities are there. Well, that's going to lead you to which due diligence artifacts you have to collect, what questions in your questionnaires you have to ask. You don't want to take a big questionnaire like a SIG questionnaire, very common standard in the industry, and 1,300 or so questions. You're not going to ask everybody every one of those questions. They're not relevant. Somebody's not in the cloud business doesn't have to answer questions about cloud. So you want to scale that collection to the controls that are relevant. Your next step is going to be to take that list of controls, and here, let's just say again, we're using our ISO or AUP framework at 100 and something controls. Let's say 25 controls are relevant to a given relationship. You're going to end up with something that looks like a spreadsheet. It's called a control matrix. Each row has one control, and room next to that control, which is a description of a countermeasure, as I said earlier, against a particular vulnerability or threat. And so you're going to look at how your vendor manages that control. How good a job do they do at implementing that control? So you're going to essentially be grading them on how well that control is actually operationalized. So you've got, again, your 25 rows in your spreadsheet, in your control matrix. And let's just say that 5 of those controls turned out to be ineffective. They're just not doing a good enough job in those areas. Your next step is going to be, you're going to tell the vendor what you want them to do to fix those problems. So you're going to create a remediation worksheet or a vendor action plan. You're going to tell them, these are 5 ineffective controls. Here's what you'd like you to do to fix them. You're going to have a negotiation with the vendor. It's unlikely that your first pass of this is going to be what you agree upon, but the vendor is going to need to know what the problems are, and you're going to need to know what they're going to do about it. So once you have that in place and the vendor is actually going out and remediating, they're fixing the problem to your satisfaction, your last step is going to be to report on risk through something that everybody seems to call a risk register. So this is going to be a document that you're going to present to people like the line of business person that's trying to hire this vendor. You want to show them, here's the risk that you're going to expose us to if you hire this vendor. Could go to a board of directors. In many cases, we've seen that these reports are actually provided on a periodic basis for board review. CEO, other C-level executives are going to want to see this. So this is a very, very crucial tool. Now, along the continuum here of this process, you have essentially created a snapshot in time. You're saying, today, here's how good a job this vendor is doing at managing their InfoSec risk according to our controls. That's great. So you're going to accept whatever risk that remains, and you're going to go about your merry way doing business with them, and then a problem happens, and you've got to be able to capture that. So monitoring is very, very crucial, just like it is in other risk domains. You want to find out when there's a port open on a router somewhere, or when there is a server that has too old a version of some software, and there's a zero-day exploit that could be used to access your data. And monitoring is not a point in time. Monitoring is continuous, so it should be happening at all points. And then, of course, if you're professional about this, you're going to come back periodically, and you're going to start right back from the beginning. You're going to segment and scope. You're going to do it all again. Many companies will do that for the most critical relationships once a year. Other relationships every 2, 3, 4, or 5 years, again, depending on the criticality. Sometimes you'll get into a situation where you're going to change the nature of the relationship. And that should be a trigger to go right back to the beginning and just, once again, check the segmentation and scoping. And you may find that you have to do a different level of due diligence. You have to look at different controls because the vendor is now exposing you to new sets of risks.
Okay, so it's time for our polling question. I'm going to launch that right now. You should be able to see that on your screen. Dov or Mark, can you just walk everyone through this question?
Sure. Can you hit the page down, Pat?
That's okay. You may not be able to see it. So right now I see, if you use a controls-based approach, which standard framework do you utilize in your program? So you can select all that apply. It's either NIST, FFIEC, or AUP, ISO, PCI, or HIPAA. Fourth answer is custom hybrid framework. Or 5, you're not using a controls-based approach. And I do see people clicking in. I'm going to give you one more minute to kind of quick answer the question.
Great. And as they're answering that question, so Doug, you spoke about monitoring all along this control assessment process. I know you've had some experience with tools like Risk Recon. Can you describe a little bit of what they do? Because I think that's a relatively recent innovation in the world of InfoSec that people might be really interested in.
So a lot of people have been using for years penetration testing.
Mm-hmm.
So this is a complex process done with a lot of software, and essentially it's a paid hacker. This is somebody who's working for the good people who is going out and trying to make their way into a vendor's systems. And then they're going to indicate, well, we were able to get in here, but not there. And they indicate what should be remediated. What a risk recon or a bit site or a security scorecard will do is they're going to passively scan the presence on the internet of your vendor. And they're going to give you some of that same data that you get from that kind of testing, although, again, it's passive. It's not an intrusive thing. It doesn't require the vendor's cooperation. But you're going to find out things like, well, there's an Apache server, so this is running some kind of an application. It's an internet server type of a system. It's 2 versions old, and it's known to have exploits. Hackers know how to get into that version, and people have patched it. They've improved Apache, so you really want to be on the current version. You don't want to be 2 versions behind. A Risk Recon is going to pick that up. They're going to find out what versions of Apache and all the other software that are on that vendor's publicly available site. There are different web servers. It's going to tell you there's a patching problem here. They're not doing a good job. They're going to score it, and they're going to tell you, here's the server that we have a problem. You may want to go to that vendor and tell them, we're seeing a problem here. Could you remediate it? So essentially, it's something that gets added to what's called an issue list. It's a remediation.
Dov, can I interrupt you for a second? So our audience is viewing the results right now, and I'm sorry that our panelists cannot see the results, but I'll just read them out to you. NIST scored 43%, FFIEC, AUP has 24%, ISO, PCI, and HIPAA have 46%, custom hybrid framework is 22%, and those not using a controls-based approach is 13%. I just wanted to let you guys hear the results even if you can't see them.
Got it.
So this is a group that's obviously gone deep here already and is already taking advantage of the best standards that are available.
Great.
And that's fantastic. That's great.
So in that controls assessment process, take us back to segmentation, that beginning step. Tell us how it's done.
So there's a number of different ways that this could be done, but the most common one is to send a questionnaire, a relatively simple questionnaire, to the vendor manager or the relationship manager. This is somebody who's going to hire a vendor, and presumably they're going to know what that vendor is doing and what tools they're going to use within your organization's portfolio. And so you see here a good example of a simple segmentation questionnaire, and this is actually really a segmentation and scoping questionnaire, because it tells you which control you derive from this, which controls are going to be needed. This questionnaire will again be typically filled out by the line of business person who's hiring that vendor. It should be reviewed by somebody within the IT security organization. One of the common oopses that we see is that this gets filled out for an attorney. You're hiring an attorney that's going to do some document review, and that document's going to have some critical customer information with PII, personally identifiable information in it. And so the line of business person says, well, that's fine. That's a very simple classification of a vendor. They will have access to customer data, but there's no technology involved. And so the IT person is going to go and look at this, and they're going to call the vendor, this attorney, and they're going to find out, in fact, that they store the organization's documents in a cloud-based document management tool. Guess what? That's a cloud provider, and you need to include cloud controls. So it's important that someone in IT security review this. By the way, it's just been mentioned to me that the example that's on the screen is a little different than what you see in the playbook. Conceptually, it's the same thing. We just wanted something that would fit nicely on the webinar and the screen.
This would be a snapshot from the Hippiros 3 PM system, but just as an example, it automates a couple of those pinch points in the InfoSec assessment process, which is segmentation, figuring out which third parties are in scope, and then figuring out which control should apply to this relationship so that the correct questions get sent to the third party. And that alone, I think, would take a fair amount of labor out of the process. So once you're done with this, you move into due diligence. Would that be correct, Doug?
Absolutely. So you now know the level of assessment you're going to perform on the vendor because you know the level of criticality. They're low, they're medium, they're high, they're moderate, they're critical depending on what scale you use, 3-step, 5-step, and you know which controls you're going to be assessing. That's going to drive which due diligence materials you're going to request, what questions you're going to ask them in a questionnaire, and what documents you're going to ask them for. And here's an example, and this actually is directly out of the playbook that we're giving out to you, of a fragment of a questionnaire. A common questionnaire would be something like the Shared Assessment SIG, or many organizations have derived something from bits or created their own. But this is a section of a questionnaire that's going to talk about an information security policy, and it's going to ask a series of questions based on a gating question. So that first question that's in bold, a no answer to that might eliminate, in a good automated system like Hippiros, is going to eliminate all those other questions. So you can start out with those hidden. You say, yes, there is an information security policy that's communicated to constituents, and boom, 4 more questions show up, and you're asked to explain when you have a no here, for example, you really should be made to put a comment in. Why don't you communicate your information security policy to temporary workers? You'd better have a good explanation. That's something that you're going to want to consider when you're doing your assessment.
So once I've collected the answers to the questions and they've sent over the document attachments, I guess like SOC 2s and InfoSec policies and things like that, how do I go about that next step, which is the assess phase? Mechanically, how is that done?
So as I said earlier, there's a tool, and we have this in the playbook. It's called a control matrix. Most people set this up as a spreadsheet. It's It's a spreadsheet with a row for every control that you've scoped in. So somebody at the beginning of the process, if you don't have automation, will have to manually format that spreadsheet and put the list of controls. Again, earlier I gave an example. Let's say there are 25 controls relevant to the relationship, 25 rows in the spreadsheet. And this control matrix is going to have a name of a control. It's going to have a control objective. So what is this control meant to do? How does it protect you from something? And it's going to provide places for the assessor to fill out what they did in order to do an assessment of that control. So what did they review? They looked at the 2016 board minutes. They checked system logs. They interviewed key employees in this location. They checked a sampling of 30% of the rooms in the data center for fire suppression, whatever the control does. You're going to want to indicate what you did in order to check the control. You're going to want to record what is commonly called a finding, which is I found a problem, or I didn't find a problem, hopefully, but you're going to find problems inevitably. Here's what I found. And then you're going to want to grade the control on an effectiveness scale. And we've given an example in this playbook where you have pass or fail. Well, those are kind of obvious. And then there's another tick in the scale, pass with observations. A lot of people who use that scale will say that's where the vendor doesn't have that specific control in place, but they have what's called a mitigating control. So Mark, to go back to the example that we gave earlier of a control for password management policies and procedures, what if a vendor answers a bunch of questions to indicate, no, we don't require our employees to change their passwords. No, we don't have password complexity. And so if you look at that and you say, oh, we got a problem here, they don't have a control of effective password management and policies and procedures, and they say, that's true, but we use biometric authentication. When every one of our employees sits down to work at their computer, they get their retina scan, and they also have to supply a two-factor authentication, a second factor in that they have to shove a card key into a reader. That's much better than password management. So again, that's a mitigating control. You'd indicate that with pass with observation. So this is the canvas on which you paste the assessment. And here's where you're going to indicate the strength of the control and therefore the resulting residual risk that you're going to have.
So in an InfoSec organization, if we're assessing third parties, you're painting a picture whereby let's say normally without automation, I have to figure out which controls apply to this relationship. And then do I construct this spreadsheet where there's a line or a row for each control with all these columns in it where I kind of keep track of how they're doing and what I observed and whether they pass or fail. What if there's a problem? What if they, I find something that's a gap, but you know what happens right out in the line of business, they still want to do business with the third party.
So if you take a look at what you're seeing on your screen right now, I can give a nice concise answer to Mark's really good question here. You have a problem that control failed, and you're going to tell your vendor, I need you to fix it. So what you have here is a proposed countermeasure, or often called remediation. Here's what I'd like you to do to improve the effectiveness of the control to the point where we can accept the risk. So it's to get to an acceptable level of risk. So that's, again, a remediation. Remediation has to be very, very specific. It has to be actionable. It has to have an internal owner who on your side is going to own the problem, making sure it happens. And there's got to be somebody at the vendor, your contact, who's responsible on their side. And you have to have a target date. When are you going to finish this thing? And so you have to have a closed loop here that goes from the process of identifying the specific control failures and then prescribing remediations for them and managing to those remediations so you get to an acceptable level of what's called residual risk. And just for those who might not know what that means, well, you start out with something called inherent risk. That's the risk of the type of outsourcing you're doing. Again, my example of your gardener who cuts the grass is inherently a low risk activity, whereas your co-location partner is inherently a high risk activity. And there you're going to need to have really good controls, whereas for your gardener, you don't need such sophisticated controls. And so the residual risk is the inherent risk minus the control effectiveness. And everybody calculates that in different ways, but that's the basic idea. You take the risk of doing business with a certain kind of outsourcer, you look at the effectiveness of the controls they employ in doing that business and protecting your data, and that gives you a read on the resulting residual risk.
So I would guess you do this. You have a lot of third parties. We have a lot of controls potentially that apply. How do you keep track of all of these remediations? Like, what's to say they don't just get away from you because I'm not looking at the spreadsheet every day? How is that problem addressed?
Well, the best way to address that problem is to have a really robust workflow platform. Well, it's going to track all of that. But the specific tool most people use will be a report called a risk register, and that's going to be, in many cases, a roll-up of different kinds of risk. And so here you see we've kind of moved the zoom lens out. The focus before was all on the InfoSec controls. Now we're done with that specific area of focus, and we're looking at all the overall risk, the risk domains that apply to this relationship, and we're going to figure out what's the overall risk of the relationship. And that's going to be a kind of an index for an organization. What do you have to focus on? Obviously, the ones that have the high residual risk are the ones you're going to focus on. But in a really professional and effective system, you're going to want to have reporting that goes high, like this, concept, overall residual risk. You're also going to need to go low. What are the specific issues that you're tracking for each of those vendors in each of those risk areas? And so just going back to our control matrix in our playbook, and there you have your remediation worksheet. Essentially, it's a couple of the columns. Well, if you had a really good workflow system, you might want to have this risk register not only include the high level of the risk, but include the detail. If the vendor does not remediate the following issues, we're going to have a problem. So you want to see those issues on a report like that.
Thank you. And this is why we're so excited about this domain, because getting back to the opening messages in this presentation, we're in a place where outsourcing continues unabated over a multi-decade window. The level of exposure from third parties is growing. Most of the breaches that are occurring are coming from third parties. So this is an area that's really ripe for automation, because InfoSec people have this very complete and very diligent, but also very tedious process by which third parties are managed for information security. So it's hard when you're in a manual or semi-automated or an Excel, SharePoint kind of world to push volume through that thing and get efficiencies. But not only to get efficiencies, but to actually cover all the third parties that you need to cover in order to provide the protection to the firm that you're there for.
Very true. By the way, if you're looking at the playbook document, we've been talking about the elements on pages 13 and 14. Everything we're talking about here is in the playbook in various different illustrations. So I think at this point, we'd like to open the floor to everybody who's listening. Do you have any questions? Would you like to raise any issues with us?
Thank you. We do have quite a few questions that have come in. First, how do you think third parties can be actively monitored in the context of InfoSec assessments?
So this is Dov speaking. There's two approaches that we've seen out in the market. Some people, when they say the term monitoring, they mean that they're going to refresh the assessment on a periodic basis. I think, Mark, you often call that rinse and repeat.
Yep.
A nice, colorful term for the voodoo that these people are doing. But they're going to come back and they're going to redo an assessment, or sometimes a piece of it, on a periodic basis, every year at the most. It's hard to do this more than once every year, but sometimes in a less frequent way. But there's a technology solution, as we mentioned earlier, it's really, really effective, using a provider of either IT threat feeds or what some people call a validated vendor InfoSec practices data feed, very, very long phrase to say, tell me what's really happening today with that vendor. Do they have ports open? Do they have old versions of critical software on their internet presence? And so a great way to do this monitoring is to do your assessments in the way that we've been describing, and then matrix in the data that you get from one of these other providers, a risk recon, a security scorecard, a bit site, and bring that together and be able to generate automatically some alerts. If something is out of band, you want to know about it right away. You want to show that to maybe the vendor manager, certainly to an IT risk expert within your organization, one of those SMEs who can say, that's a problem, let's talk to the vendor, here's what could be done to fix it. So the key here is your data has got to be actionable. The more actionable it is, the more realistic it is that you can respond to it in a way that solves the problem.
So in an automated platform, something like Hippero's 3PM, I might go through this fairly diligent controls-based assessment process, then something like Risk Recon takes over, keeps its finger on the pulse of what's going on in my vendor community with any of their externally facing IT presence. And then if something hiccups, an alarm goes off, somebody gets an email and they have to go attend to whatever the issue is.
That's exactly right, Mark, and that's management by exception at its highest form. But I'll mention one other thing that we think you should do if you subscribe to one of these threat feed platforms. You have to do a lot of work to collect data from your vendor in order to do an assessment. Why not leverage what a risk recon provides? They're going to tell you what versions of software your vendor has on their internet-facing servers. Include that in your assessment. That's another force multiplier in an area where you desperately need to multiply the effectiveness of your resources.
Yeah, especially in an environment where the threats are so nimble and the controls assessment process is fairly tedious and laborious.
It's cumbersome.
Other questions, Sharon?
Sure. How many third parties do companies manage at the control level? Is it dozens or hundreds?
Well, obviously that's going to depend on the size of the organization. I'll give some examples of organizations that I've talked to where I have specific numbers. A large, let's say a big U.S. bank, is going to typically be doing on-site assessments, very, very costly, very intense, for 400, 500, 600 vendors per year. They may be doing other forms of virtual assessment or simpler just questionnaire scoring on another, let's say, 1,500 vendors that they're doing business with. Let's scale this down to a smaller organization. You could have just 10 or 15 critical vendors that are going to get subjected to an on-site assessment, and 300 that are going to be undergoing some kind of a virtual or remote assessment where an SME is on the phone and doing screen sharing through a WebEx, looking at the vendor's environment and asking tough questions and getting good answers. Any other questions, Sharon?
Yes, I do. I just wanted to remind the audience that I just resent the link to everyone for the playbook. It is in your control panel, and you should, if you have it shrunk, you should open that up and be able to see the link right to the playbook. Next question: can we use our own scoring program?
So there's several different levels at which these controls assessments are performed. A typical format would be to say, for your low-risk relationships, you're going to get a questionnaire, let's say something like a SIG-Lite, 140 questions, kind of high-level gating question level, and you're going to score it, and it's going to pop out a risk level, a low, medium, and high, and it's going to indicate where there are problems. So going up from there to a medium, and there it's kind of hard to score. You might use scoring as a support for assessments, but that's not really how the best practice seems to be holding out in the marketplace. People are doing a subject matter expert assessment. A human being, an expert, is looking at all the controls in that category.
And determining whether or not they're effective.
Yeah, and certainly in the critical or high relationships, you've got a subject matter expert looking at it. And that's why efficiency in this process is so crucial, because there's a step in this process that just can't be automated. You've got to have a human being who's looking at it. You want to automate as much as possible everything else around it so that their time is used most efficiently.
But I will say, Sharon, I think all the automated platforms that I've seen do allow the client to put their own particular math and scoring logic into the system, because everybody's risk profile is a little bit different. What might be a medium risk for you might be a high risk for me, that sort of thing.
And Mark, I just to respond to that, just thought of another idea here, that we talked about a process that assesses the effectiveness of a list of controls. We talked about 25 controls for a relationship, and you're going to score effectiveness and residual risk for each of those. There's going to be a roll-up of that. There's going to be some kind of a weighting that's going to result in an overall score. And that's something that every company is going to have their own individual take on.
Great. Other questions, Sharon?
Besides control frameworks, are there other standards that can help in the assessment of InfoSec, of third-party InfoSec?
So we've been talking about some of the well-known standards in this field, like the control frameworks that are most popular in this group here. NIST is obviously number one, ISO, COSO, COBIT, FFIEC, CAT, the list goes on and on. Those are really robust standards that have been put together by some very smart people for control frameworks. But typically, when you approach a vendor the first time, you're not going to send them a list of controls because they don't use the same control framework. What if you're a NIST shop and they use ISO? So you've got to have some kind of an agreed upon common language, and that common language, at least for the initial phases of data gathering, is going to be a questionnaire. And there are some questionnaire standards out there. The most common one in the United States is the Shared Assessment SIG. Many people know that by its old name, BITS, B-I-T-S. These are questionnaires put out by a nonprofit organization, a member-driven organization, and those standards are gaining force. So the SIG and SIG-like questionnaires, they're good standards, and what's helpful for any organization is that they can look at their vendors' control environments through their own lens of their own control framework. So let's say that you're a NIST shop. Well, the shared assessments people are going to provide a mapping for you. It's going to tell you these questions map up to the following NIST controls. So you can still use your control framework, which is not common with your vendor, not necessarily, and your vendor can answer questions, and you can know how that relates to your controls. So some people within our organization call that a Rosetta Stone. It's a translator between different languages that different organizations speak. A great use for these standards would be a shared repository where a vendor could answer one of these questions or questionnaires once and share it with many customers. And that's something that we can talk about within our organization. We've got that technology to do that within what we call Hyperos Network. Do we have any other questions? I think we have a few more minutes here, not too many. Sharon?
That's good. We do have a few more questions. Is there a unified third-party risk management service that I can subscribe to in order to supplement my internal risk assessment capabilities?
So is there a fast and easy, push the easy button kind of answer for InfoSec? No, probably not. But there are some things to take advantage of out there. So I would subscribe to some of these risk frameworks because they often will provide workbooks that'll help you think through it. I think a tool like a Risk Recon is something that any company can subscribe to, load in your third parties, and you get back this thing that looks like a risk scorecard on the third party. And I won't say that's a proxy for doing a controls-based InfoSec risk, but it will very quickly surface issues with that third party. We use the tool here, and we're often surprised at some large prevailing companies that are IT service providers to many of our clients that do have issues that are in the public domain. So that can help considerably. Lastly, I'll mention there are a lot of outsourcers for this kind of work. Many companies you probably work with, like Accenture, has a whole managed service around this where they'll just do it for you using tools like the HIP Heroes 3PM platform to just deliver results as opposed to you doing sort of a do-it-yourself kind of thing.
The holy grail to a lot of people within many of the industries we talk to is deliver me a risk rating. Probably a while away from that because there is no agreed upon standard definition of risk, and there may never be one. But an outsourcer like Accenture or any of the other big outsourcing organizations could do the data collection for you, which is really the most arduous part of the process. And so if you had somebody who went out and tested controls, and you could use a standard control framework like a NIST or shared assessments AUP, you agree upon that, and they can deliver back their testing results, and then you can just grade those results on your scale. Well, now you're not trying to outsource risk. You're outsourcing data collection. You're still making a decision on risk, and if you're in the financial services industry, you know your regulators are not going to let you outsource risk, and you can't outsource risk. There's no such thing. You can outsource a task, but your organization is always going to own the risk. So it's a great combination, and I think that that's where you're going to see more and more action. Technology providers like us, with our platforms, facilitating standards like shared assessments, SIG and NIST and all these other frameworks, and assessments that are done in a standardized way on vendors that are shared. That's where I think the world is going. And then the organizations can then decide through their own risk lens what that means to them.
Sharon, how about one more question?
How about two more?
Okay.
What if we have multiple control frameworks? And you probably kind of covered that one a little bit.
Well, we have and we haven't. I mean, we haven't been very specific about how that would happen. So let me give two examples of where you might have many or at least two. Let's use a simple example, two control frameworks. What if you have one control framework, let's say it's NIST, for general information security and data protection, but you are required to deal with HIPAA because you have an FSA, you're doing flexible spending account servicing. So HIPAA is required by the regulators. And so you have two different assessment lenses there. They really are different. And they will be typically reviewed by different SMEs. The SME that understands NIST is not going to understand HIPAA necessarily, and vice versa. So that's an example of where you're probably going to do two separate assessments. They could be done in the same on-site visit, but the stakeholders on both sides are going to be different. There are other examples where we've seen organizations blend best tools out there to create something that's unique to them. Very common, combining NIST and ISO, or NIST and FFIEC controls. And that's where you're putting together the same kind of controls in a hybrid. You want to cover more than either of the frameworks covers, but you could do that in one single assessment. And so there are many ways that this can be handled. It depends on the objectives for the assessment.
Another driver for that will be when new regs come along, like GDPR, General Data Protection Regulation, where frameworks haven't caught up to it yet. So InfoSec people have to flesh out their own controls that they'll put on top of NIST or whatever it might be until such time that the next version of the framework gets published. And
that's
curating that framework is not easy.
Give you another great example where many people are using NIST, very robust. It has very, very good controls for business continuity and disaster recovery. But if you are regulated like you're a bank, you're regulated in a certain way, you're going to be facing Appendix J, FFIEC Appendix J, and it has an additional set of BCPDR controls that you should be focusing on. So you might want to put those together to get what you actually need for your business and to satisfy your regulators. Any other questions, Sharon?
One more question. do you manage third parties at the vendor level or at the service level?
So if you think about typical vendor or third-party management, there are certain risk domains that are inherently handled at the entity or vendor level, company level. Financial viability is a great example. You want to know how viable your vendor is as an organization, that's going to be at the entity or vendor or company level, whereas InfoSec risk is almost always going to be done at the service level because your vendor probably has different infrastructures for different products that they provide, and so their InfoSec profile is not going to be the same. So here in my example, you've got a company that provides a certain kind of outsourcing for you. You use 2 of their applications. You can do 1 financial viability assessment. You're probably going to have to do 2 InfoSec assessments, and that's going to be at the service or contract level.
Okay, thank you very much, guys. This was great. So I'm just going to let the audience know now this does conclude our webinar for today. If you did submit a question that we didn't get to, we will forward the questions to our speakers and to the appropriate speaker. But if you have additional questions, please feel free to reach out to us using the contact information shown on the screen, or you can always go to www.opus.com and send questions through the Contact Us form on the website. The slides and the recorded webcast will be uploaded to the opus.com site at the beginning of next week and available for replay. We appreciate your participation, and we look forward to seeing you at our next event. Thank you, everyone. Have a great day.